welcome to another edition of the MDM podcast. I'm Mike Hockett, our executive editor. By now, all MDM readers should have seen that our 2023 top distributors lists are now live for all to view. Those lists count down North America's top distributors of industrial, commercial, and building supply products by their annual revenue within 17 different product verticals. It's a huge project, and we think it provides a valuable snapshot of those different industries and who the top players are in each of them. We debuted this feature in a June 8th webcast, in which we shared a handful of our rankings lists and analyzed what shaped this year's lists and a lot of the factors involved. The webcast involved a handful of guests, including Grainger Executive Vice President Paige Robbins, who is president of the Grainger Business Unit, Channel Marketing Group's David Gordon, Webb Analytics' Craig Webb, and MDM's Tom Gale. It also included audio clips from recent interviews with BlackHawk Industrial President and CEO John Mark and Kimball Midwest President Patrick McCurdy III. This podcast features the audio from those webcast guests who provided crucial context and nuance involved that readers should find pretty valuable as they peruse our many rankings lists. Grainger's Paige Robbins was the first guest on the webcast, which was great since Grainger appeared on 10 of our 17 lists, including at number 1 on 3 of them. She touched on what it means for the company to have such strength in so many product categories and what the industrial supply chain looks like and what the general forecast is for industrial demand in the second half of 2023.
You know, we are really very proud of this achievement, and we've been working for years to achieve scale in different verticals. You know, at Grainger, we offer over 2 million products and service millions of customers across different verticals and industries. And we are able to do this by both leveraging our world-class supply chain as well as our superior customer and product knowledge. And so I'm going to talk a little bit about both of those. You know, our supply chain is purposely built and designed to serve business customers at scale and deliver orders next day and complete. And this is what our business customers really care about. And we do it almost 150,000 times per day. And also, if you think about our range of products, we carry things that are small, like earplugs, to fragile light bulbs or big bulky ladders. And our supply chain can handle a really wide range of products for lots of different industries and verticals, which allows us to serve lots of different types of customers. And then, you know, in addition to our supply chain, our superior customer and product knowledge also allows us to service multiple verticals. You know, we've been investing heavily in our product and customer information to know our customers even better and help them find the product they need as quickly as possible. So let me give you an example. Like let's take up earplugs again. You know, a facility manager at a food processing facility needs earplugs that are metal detectable. But a facility manager at a warehouse might need a certain earplug that meets a certain OSHA guideline. And if you think about it, there's many other customer needs and applications on such a simple product like earplugs. So we work really hard to ensure that we have a really large assortment for all our customers and their applications, and that we have that right product information so customers can find that product really quickly and choose that product confidently. So I'd say by both leveraging our product and customer information, that allows us to get greater customer intimacy across those many different industries and verticals, and also our supply chain, which allows us to carry a very broad assortment it helps us get to customers next day, allows us to be able to service that many different verticals and industries.
Yeah, certainly Grainger's presence spans the gamut here, and I think our lists really reflect that. And certainly the vast majority of this year's MDM top distributors benefited significantly revenue-wise from the inflationary economic conditions in 2022, which really required a constant pricing diligence that has been practically an art in terms of the strategy involved. And I asked this to CFO Dee Merriweather in an August 2022 podcast interview, but whether speaking on behalf of Grainger or the industry at large, just how tricky has that pricing strategy been to get right amid so many ongoing market factors?
That's a great question. You know, pricing has been very difficult during this uncertain inflationary period, and the market's been really dynamic. And at Grainger, our pricing philosophy is to make sure our prices are in line with the market and to maintain relative price cost neutrality over time. And what's been really tricky is to understand where the market is going. And at Grainger, we have sophisticated pricing models, analytics, and other inputs to better predict where the market is going and price accordingly. But what's been really different recently is that we've seen the market evolve differently for different product categories. And that's resulted us in taking some prices up and some prices down as different dynamics are affecting different product categories. So we are constantly monitoring the market and other leading indicators to make the best pricing decisions. But it has been a tricky year. And more importantly, though, we also are going to continue to focus on our customers to ensure that we're providing each and every customer great service and value even beyond our products.
That's great. And for at least a year now, probably longer than a year, there's been so much talk and economic noise as far as the forecasts about a pending economic or industrial slowdown that's on the way. And while there are a considerable number of economic red flags out there, we do continue to hear a fair amount of optimism from distributors industry-wide, with a lot of companies still noting that there's continued solid demand and long backlogs that are going to carry them for a while, and just overall strong numbers almost halfway through 2023 here. And that includes Grainger, where its 2023 first quarter sales were up 14.5% year over year, and the company's full year outlook in that report, it called for 7 to 11% daily sales growth. So can you just touch on what the company's industrial demand outlook is for the rest of 2023 and what its key drivers are at this point?
Sure. It is really hard to predict what is going to happen to the overall industrial MRO market. And if you follow market projections, they have been constantly changing. Yeah. Now, what we've seen is many of our customers in the industrial space continue to see solid end market demand for their products. However, we do see some customers with more consumer-facing exposure heading into a softer demand cycle. And so at Grainger, we just really focus on what we can control and what we are doing to drive growth greater than the market. And so this includes continuing to deliver a flawless experience to our supply chain, as well as executing on our growth engines, which focus on adding additional value to our customers. And these engines focus on different things, including making sure that we're having the best assortment and merchandising in a way so it's easy for customers to find the product they need, investing in marketing in order to build awareness, send tailored messages to our customers based on their needs, and executing our digital advertising strategy, as well as investing in sellers and customer solutions such as keep stock or consulting to help customers solve their problems. So that's why we measure ourselves on how much we outgrow the market, and we have set a target publicly to outgrow the market 400 to 500 basis points.
It's a pretty high bar. And you mentioned already about Grainger's supply chain strength, and Grainger has publicly mentioned several times recently that easing supply chain conditions are part of the reason why the company is expecting another strong growth year for 2023. So just a little more on that. How would you describe the state of the supply chain out there for the industrial products markets Grainger serves today, and just how it compares to, late 2019 or pre-pandemic?
Yeah, the return to more normal supply chain performance is great news for our customers and our supply chain team. So far this year, we have seen improvement in supplier lead times and availability. And this has resulted in sharp improvement in our service metric that we're near pre-pandemic levels. And this has happened faster than we anticipated, at the start of the year. So we are basically back to pre-pandemic levels. And as a result, we're able to immediately decrease frictional costs within the network by reducing that average shipping distance to our customers, minimizing handling costs, all while delivering a higher percentage of our orders complete and next day to our customers, which our customers really value. And, this improvement, as we've seen it, is just really a reminder of just how much unusual and extraordinary activity we did to get product to customers throughout the pandemic and that subsequent availability challenges.
Our webcast included a short audio clip from BlackHawk Industrial President and CEO John Mark. BlackHawk was number 32 on our top industrial distributors list and number 14 on MRO distributors. John touched on BlackHawk's frequent acquisitions over the past 2 years, but emphasized that the company has also had plenty of organic growth along the way.
We definitely made 7 acquisitions in 2022, which helped us in the inorganic growth, but we've had a lot of organic growth initiatives as well that we've used to expand on into new categories with existing customers, as well as going out and acquiring other new customers. A lot of national accounts. That's been a big part of our business growth, is acquiring larger businesses, larger customers, I should say, that have a broader, footprint and different level of requirements. But we've been very successful in winning a lot of those accounts. That accounted for a lot of our growth in 2022 as well. After you net out inflation, right? Inflation was a big part of everybody's growth in 2022. We benefited from that for sure, but we definitely had organic growth above and beyond the acquisitions and the inflation-related growth.
Our webcast also included a clip from a recent interview with Kimball Midwest President Patrick McCurdy III, as his company ranked number 38 on our top industrial distributors list and number 16 on top MRO distributors.
Well, first, we're always, grateful to be recognized by the MDM group. I think that's been something that has meant a lot to our organization, and it's very credible for us when we're in the field talking with customers and suppliers about who we are and what we're doing. So excited about that, and then excited and grateful for the results we've had in the last year and a half. When organizations go into challenging times, you don't really know what's going to happen, and so you're trying to do the best you can and execute effectively. And we were really lucky to have great people that found ways to help our customers thrive. And I think that's probably our biggest takeaway in these challenging times, because there was, like you said, inflation, and there have been other headwinds that are out there that face a lot of organizations today. And yet ultimately, certainly still think it's a people business. And for us to be able to get on site and be able to help customers, still providing online support. There's a lot of material out there on why and how important that is, making sure that we're helping out there. But being on site, helping customers solve problems every day, we found a way to really have success. And so really last year in 2022, we had really a great year. Look forward to seeing the rankings and how those come out.
Our webcast brought in 2 outside sources for rankings analysis. First up was Channel Marketing Group founder and president David Gordon, who served as a crucial validator for our electrical data and security distributors list. So David, welcome.
Thanks, Mike. Look forward to contributing again this year.
And like I said, we always appreciate you helping validate and make sure that, we're well within the ballpark when it comes to, who should be on this list and where the revenues are. David, any initial thoughts or things that stand out to you when you look at this year's electrical data and security distributors list?
The overall list and the rankings of them is probably very similar to what we've had in the past few years. This past year, obviously, 2022 impacted between supply chain issues, the numerous pricing issues, when you have distributors doing 7 and 8 and 10 price increases in certain product categories, that drove it. But the electrical industry has also benefited from COVID, from the government funding with the IIJA, with the IRA program, with the CHIPS program, with electrification. All those things have added. The other thing that's benefited some of these companies, but it kind of worked in lockstep, is growth in the utility. So people like a Wesco and a Sonepar really benefit from the utility side of the business. And there's also been, in the last, not counting this year, there's been 67 acquisitions between 2021 and 2022. Last year, there were 36. Many of them were from companies on the list.
Yeah, I know. Obviously, we keep seeing Sonepar making numerous acquisitions through its subsidiaries. Rexel North America has been very active. And I mean, those are 2 that are near the top of the list. But yeah, like you mentioned, there's been plenty of activity throughout the companies on this list here.
Yeah.
And with that, go ahead.
Not to interrupt, but on the acquisition that would surprise many is Grainger.
Yeah.
Grainger set up a division called North American Subsidiaries, and they've acquired a number of companies over the last 2 years that don't even have the gray bar nameplate on them, and are also further differentiating the companies or diversifying the companies into other industries.
Right.
That's a dynamic that's starting to change within the industry of companies looking to diversify.
Yeah, it's definitely something we're going to keep track of. You think of a couple other companies like Turtle and Hughes is going they're investing heavily in the what am I trying to say here? The electrification space of just the renewables out there. They've created a whole separate division for that. So I'm kind of expecting to see acquisition activity out of them in the renewable energy space, which is within the greater electrical space, but it's something that they haven't done quite as heavy before as they are now. So you mentioned already a few companies on here, but of the 25 companies on our list that we're seeing here, are there any that you thought had a particularly interesting 2022 or since so far here in 23?
Well, Border States has done well, especially with the utility. Anyone who was industrially oriented, they benefited from the growth on the industrial side, and as well as industrial construction, where there's a lot going on because of the electrification, really the EV, all the battery facilities that are going up in the new automotive. We're seeing more growth happening on the southern tier, southeast and southwest. Crescent made a nice acquisition down in the southeast with its acquisition of Low Electric. Maine has grown a lot through new organic branches. So has Elliott. I mean, Elliott's up to about 180 locations now, going from Atlanta all the way through Texas and now getting up to Kansas City. A surprise on the list is Motion Industries. People don't think of them as electrical, but they're doing about $600 million from our calculations and feedback from them just within the automation side. And a lot of people don't remember that automation is an element of the electrical. And, from a manufacturer viewpoint, it's just looking at the various channels to try driving the business.
Yeah, automation is one of those industries that's seeing just heavy investment right now by Motion and a few other of our traditional industrial distributors. So yeah, it's just part of that diversification factor that we're only expecting to continue here. And I'm glad you mentioned Motion. Obviously, we have Grainger on here again at number 16, just one of the 10 lists they appear on. Looking at the outlook going forward here, we're hearing cautious optimism from industrial distributors as far as the current demand and the outlook for 2023. But what are you hearing yourself as far as the current demand or sentiment from electrical distributors or manufacturers in terms of where that demand is now and what it might look like in the second half of 2023?
Well, I'm going to give you two different answers. I was just at the NAD National in the end of May. And there were about 50 distributor entities, more of the progressive distributors, and they're looking pretty much at about a 5 to 9% growth rate for the second half of the year. However, half of that for many of them is switchgear orders being filled that are right now on back order. And that back order is a year or so, and transformers can be up to 3-4 years. So it doesn't show up on the manufacturer side because they've already gotten the order. The distributor doesn't realize it till it's built. And some of those distributors could even, depending upon when those orders get filled, may have the opportunity to get the next piece of the order for that project because then the gear has gone in.
Yeah.
We also see that there's a difference based upon geography. People who are here again in the southern tier are growing at a faster rate. And the ones who are expecting a faster growth comes down to market segment. If you're resi, you're in trouble. If you're commercial construction, small project, those are slowing down. Large projects are bitter. The manufacturer side, though, for the most part, they're looking at flat. So it comes down to the difference. And the industrial is still strong. obviously industrial construction, the MRO, it's a little bit questionable because that comes down to the industry that their end customer is in and what happens on the macroeconomic elements.
Yeah, it's definitely hard to make, broad, details about the outlook here because it is so specific to each niche within each of these markets, which are just so fragmented here. So yeah, it does require a lot of nuance when you're looking at, who's doing well, who's slowing down, who's, just that overall outlook. So David, those are some excellent insights here. I'm glad you're able to share them with us today. And thanks for joining the webcast.
I enjoyed it. Thanks a lot.
Our next guest was Craig Webb, who runs Webb Analytics and serves as a validator for our building materials and construction distributors list. Craig, welcome.
Thank you very much, and greetings from a very smoky Washington, D.C. right now.
It's something out there. It's all the news can talk about right now. Craig, any initial thoughts or things that stand out to you when viewing this year's MDM top building materials and construction distributors list?
Well, I think there's two things that, in terms of what happened in 2022, that really need to be discussed. The first is the impact of lumber prices. If you were to take most lumber yards with manufacturing capabilities 2 years ago, their revenues rose something like 59%. Of the ones I tracked this year, their revenues rose in 2022 by 18%. And if you look at where Builders FirstSource and some other people are reporting their revenues for the first quarter of this year, they're going to start shrinking. So it could very well be that Builders FirstSource may be a $19 billion company next year, right, just because of what lumber does to prices. Now, this is not something that affects ABC Supply anywhere near as much, or SRS or Beacon or GMS, because they don't really make lumber their number one thing. But ABC Supply, right, and Kodiak will be affected. The second big factor that I think doesn't show up here is the dramatic increase in activities by building material dealers to provide value-added services. And traditionally, that's been truss factories, wall panel plants, door factories, and things like that. Some of the biggest acquisition activities last year were in those sectors. And my survey found that something like 1/3 of all the revenues that the biggest building material dealers get in the United States is from providing value-added services. Lumber matters, but what you do with the lumber matters too.
That's a great point. And I just want to point out real quick, I should have mentioned earlier, there's a couple companies you'll find throughout this list and a couple others like GMS that have that asterisk next to their revenue. And all that means is that that company doesn't follow a traditional 12-month January through December fiscal calendar. So that's meant to visually identify that, they don't follow that traditional calendar. That's all that means. I just don't want anyone to think anything else for those asterisks. We're not putting, but that's all that means. But back to this list here, Craig, of the 12 companies shown here, just like I asked David, are there any in particular that you thought had a really interesting 2022 or so far in 2023 here?
Interesting is an interesting term because I'm not sure for every one of them, each of these 12 were a drama unto themselves. ABC Supply just recently, for example, shed something like 45 of its branches that were in the drywall business. They sold them to ABC Supply's drywall unit, L&W. Meanwhile, Foundation Building Materials, aside from sponsoring the Anaheim Angels, or the Anaheim Angels of Los Angeles, or whatever they call them, right, also just bought Marjam, which I always thought of as being a bit more of an industrial company. Kodiak's one of Kodiak's biggest subunits is a truss manufacturer that hardly anybody knew of, but is enormous. And their steel unit just had its 50th anniversary. So every one of these is a story unto themselves. They all, the one thing they might have in common is a shortage of building materials that last to this day. Going back to David Gordon, if he can convince the electrical distributors to start sending some outlet boxes, we could get a few more houses built in this country.
Sure. And yeah, I'm glad you mentioned that, because that's going to be a huge factor going forward here. We keep hearing how there is a residential, private home shortage here in the U.S. So it seems like some companies are, they're banking on the fact that we're going to be ramping up home construction here going forward. So we'll definitely be watching markets and just overall economic activity when it comes to home building construction, which is going to impact everyone on this list. And go ahead. I think you're about to say something.
I was about to say there are three legs to these companies. Usually it's their residential construction, which is number one. And you're right, there are some green shoots that people are talking about that were surprising them going stronger. Second is the multifamily and commercial business, which actually is up compared with single family detached home residential. And then the third is retail and remodeling. And those are slowing down, but on the high end of the remodeling, business is still pretty good. It's the smaller purchases and the less wealthy people that are having challenges. And that's why, for example, you're seeing challenges with Home Depot and Lowe's, who aren't on this list, but certainly are big giants, in part because they tend to serve a larger share of the lower end of the community.
And kind of following up on that point, we did see building materials and construction supply revenues. The growth for those slowed throughout 2022 to the point where our first quarter 2023 survey that we do with Baird showed that year-over-year revenue was flat or down slightly for both roofing and lumber and building products distributors, as pricing has come down significantly from where it was a year ago at this point. So just following up on what you were touching on before, what are the broader growth expectations for this sector for the rest of 2023?
Well, I think the growth is going to be a two-faceted question. Are you growing in dollars or are you growing in volume?
Yeah.
And for the first time in a long time, we're having to look at that. In most everybody I talk to out there say that we still got such a backlog in residential construction that they're going to be busy until the end of the year. And so while we are having a slowdown in housing starts, multifamilies is still rolling along. And by the time we get through that, we refer to it as the pig in the python of housing backlogs, it very well could be that things are going to pick up again. So in some ways, this is going to be a lower year for the lumber-centric builders just because of comparing with the previous year. But in terms of volume and in terms of business, it might not be dramatically different.
Right. All right. Well, that's just like David had. That was some excellent insight there into some of these broader factors that are impacting everyone on this list and, much further down. So yeah, a lot of things to watch as we go forward here throughout 2023 that'll shape, next year's list. Craig, thanks for joining our webcast here and sharing all this detail with us.
It's been a pleasure. Thank you.
And last but not least, our webcast brought in MDM CEO Tom Gale for his analysis of major economic and industry factors that impacted all of our top distributors in 2022 and so far this year.
You talk about moving parts and variables. There's a lot. This is not a perfect science, but I really feel that it's incredibly valuable in terms of profiling more accurately what the shape of a very fragmented market sectors that make up industrial, construction, building materials. So just kudos to you and the team. Really great job again this year.
Thanks. Yeah, like you said, it is a mammoth of a project, but it's always interesting along the way as we do this, and we learn new things about these companies as we move along. And so, looking at 2022, I suppose it was just another ho-hum year in distribution. Is that right?
So, as we as we went through this, Mike, there's a couple of areas that came to mind, and also as you went through with our guests, which again, thank you so much for to David and Craig for their insights as well into the sectors that they're really incredibly embedded into. The overall, I just wanted to share a little bit of context. I mean, overall, and you touched on this, is really this the continuing impacts of product portfolio expansion as a growth strategy across all these sectors. David talked about this across the power transmission, which you to go back even 20 years ago and where it used to be pretty separated between power transmission and fluid power products. Well, look at the growth of the big three, and even across the top 10 in terms of developing out and really growing the fluid power component of their business and their growth opportunities. And as David pointed out, that's really extended into automation and the electrical as well. And that's gone both ways, not just from power transmission sectors over into others, but also in reverse. And you also see it into industrial MRO. Safety certainly was one of the earliest in terms of add-on and growth strategy as well along that line. So that as you talk through this and all of the sort of the impacts and where the growth has taken place, clearly some of the growth that's taken place not only in the top industrial or electrical, but across the other sector lists that we have out there for this year has been a story around product portfolio expansion. The other thing I just wanted to mention on a macro standpoint is really around overall wholesale distribution growth. Overall, the 19 sectors of wholesale distribution was an $8 trillion industry in 2022. And if you go back and again, as I looked at this and preparing for this, it feels like 2022 was finally, in spite of supply chain and the pricing, and as we're moving into 2023, it's almost like this new normal is sort of setting in, which isn't normal at all. But by that I mean is there really seems to be companies have industrial, electrical have enjoyed some incredible growth years here the past two in terms of a bounce back from the pandemic year of 2020. I mean, overall wholesale distribution in 2021 was just under 7 trillion, and that grew about 20% over 2020. The growth from 2021 to 22 was about 15%. So there's slower growth there. MDM is forecasting for 2023 pretty flat growth. But I also want to put into that context that there's a lot of forecasts that are starting to improve here in terms of going forward for the rest of the year. Gartner's upgraded its to looking at sort of the downside of taking place now and the growth in the back half of the year being much more optimistic. And other forecasts are out there starting to turn a little bit in that direction too. So I'm not trying to paint a rosy picture, but we're still estimating overall growth across the industry in about maybe a 1% to 2% range. So it's going to feel very differently in a lot of ways, but I think distributors have really positioned to take advantage of that and focus on where they can get the growth out of this. The other thing, if we focus in specifically on industrial sectors, and by that we use a lot of the government data, so we're classifying this around the NAICS 4238 to get technical. But overall, the picture for this year, I think, looks a little bit rosier than the overall macro for all distribution sectors. And by that I mean the 2021, the bounce back for in industrial sectors, which the government profiles at about $500 billion, about $500 billion overall, just for those types of distributors in that sector. 2021 saw about a 12% growth over 2020. About 16% growth in 2022. So by far, last year was the strongest growth year from a revenue standpoint. Now, absolutely, components of that were very much attributable to inflation and pricing. But as we've seen and reported, there was some incredible years for all distributors, and that went beyond the inflationary impacts as well. For this year, we are actually forecasting about a 10% growth in revenues overall for distributors. And when you look at the moderation of the inflation impact, that absolutely goes back in terms of volume, and it touches on what Craig talked about a little bit, but also David, in terms of there's a lot of tailwinds here across all sectors right now that, in spite of still all the economic turbulence and unknowns going on, the debt markets are still really dragging the M&A landscape. I'm still keeping a pretty good picture in terms of the opportunities going forward this year as well. So those two aspects were kind of everything that was running through my mind as you were having your conversation today.
Yeah. And yeah, it's, depending on who you talk to, there's still some doom and gloom kind of sayers out there. But, when we're having these conversations with distributors, whether it's at industry events or just in everyday interviews, there is still a lot of optimism out there. No one's ignoring the red flags that are out there, but, they keep telling us that their order books are looking strong. What they're hearing from the field is still fairly optimistic. So I think it's cautious optimism. It seems to be the term that everyone keeps using when it comes to, what does the rest of 2023 hold out here? And I'm glad you brought up that diversification point, because it is what makes, these rankings and just the industry all the more complicated over the years. I've been doing these rankings lists for a while now, and it was easier to do them, 7 or 8 years ago when things were a little more clear cut. But yeah, like you and David and Craig mentioned, there's just so much more bleeding over into other industries. When you look at what Motion and Applied Industrial Technologies are, they're investing heavily in the automation space, which it just automation space. It just wasn't that way, a decade ago. And there is just so much more diversification out there that makes us have to dig a little deeper into what each of these large companies are doing in their industry specific revenues. So it makes it all the more interesting and challenging at the same time.
That diversification, that fragmentation also makes for strategically a lot more opportunity for growth, and what makes all of this so interesting as well. The other aspect was around M&A, and you talked a little bit about Distribution Solutions Group, and I just wanted to point out, as far as historically, M&A has kind of been divided cyclically between private equity and strategic in terms of acquires and impacts. And depending on market conditions, one is sort of in a better position, or the balance kind of shifts from time to time. What's been interesting here in the last few years, and what we've seen, is this rise in family office that has a different orientation than traditional PE, and so that's absolutely starting to have an impact on the market. Between Luther King Capital Management, between Blackfriars, there's a lot more impact and participation in the way how these markets are operating today, and some of how our lists form because of that. So I just, that's the other aspect I wanted to mention. And then finally, just to close things off here, the future of distribution is really interesting. We're in this incredible transformational area that, of course, our team is covering, and we work on all the time to identify the different elements of that. So to see these lists, this transition from more traditional bricks and mortar to much more of an omni-channel, a lot of these companies are rationalizing their locations and looking to increase, the percentage of their digital, really trying to focus on the profitability and what that looks like. The other aspect is just generationally, in terms of how these companies are shifting in the way that they're changing their go-to-market strategies as well. So again, thanks for all your work on this, Mike. Great job this year.
Again, all of our 2023 top distributors lists are now live at mdm.com/top_distributors, where you'll find the website listings of our 17 different lists, as well as a link to download the complete PDF feature. Thanks for listening.